Ladies and gentlemen, welcome back to the channel. Another Fed official just flip-flopped. And, well, that now leaves 4 Fed members, Fed governors, that are in team rate cut camp. But why is this not being taken as a super positive for stocks today? We'll discuss all of this as well as your breaking news headlines and the current state of markets in this video. Ladies and gentlemen, first things first, hit that like button as well as subscribe to the channel. Secondly, check out that link down below in the description of this video if you have not done so already to come join the trading community. And on to today's episode. Now, we do have a lot of broader market news to get into today as well. A lot of headlines. We're going to run through them pretty fast. I am kind of excited to share with you the flip-flop that you got from Fed Kashkari today. That's what really kind of hurt the small caps a little bit. We really just got to talk about that. But first, the India government says we have made our position clear on issues regarding oil imports from Russia. India's government says it is unfortunate that the US should choose to impose additional tariffs on India. If you don't know, today Donald Trump put a 50% tariff on India for buying Russian oil. Now, the fact of the matter is he can do this because India does not matter for the broader economy in the US. The only countries that matter, China, Europe, Canada, and Mexico. Okay? The UK as well, but trade deal, that was the first trade deal. Okay? So, you know, as long as we get a trade deal with those countries, the other ones just don't, they're not big enough to cause severe economic damage. Certain sectors that are heavily concentrated in India, right? If like, just gonna make something up here, if all of the, you know, cameras come from India or something, like, sure, that could hurt the camera industry a lot. But is it going to cause the economy to go through some kind of massive depression or recession or even a recession at all? Absolutely not. There's just not enough business that takes place between the US and India for it to move markets much. India does say that additional US tariffs are unfair, unjustified, and unreasonable. And India says we will take action to protect our national interests. Now, here's some exciting news as well today. Trump is expected to speak to Zelensky on Wednesday. This comes after Witkoff's meeting with Putin. So potentially we could have some solid dialogue here and ending the conflict in Ukraine. Personally, I would love to visit Ukraine at some point, especially Western Ukraine. Probably stay away from Eastern Ukraine. But that could be exciting for markets because it alleviates some of these tariff risks, right? With India or China or some of these other countries that even purchase Russian oil. India is not the only one. China does as well. Now, Commerce Secretary Howard Lutnick says the Trump-era economy has, quote, officially arrived. Also in positive news today, Mexican President Sheinbaum rules out a bilateral trade agreement with Canada, saying that it is not necessary. So basically, Mexico is like taking the US's side. Like Trump would not like to see Mexico and Canada make a trade agreement and undermine the US. Trump advisors are to push for a temporary Fed governor to fill the seat of resigned Fed Kugler. A short-term Fed pick would give Trump more time on the chair choice. The Fed pick is likely to work in the government and be previously vetted by the Senate. The Trump administration urges countries to reject the UN plastics treaty that caps plastic production. The US weighs options for penalizing Russia beyond India tariffs, according to people familiar with the matter. And here you can see that Trump signs executive order imposing an additional 25% tariff on India. They already had a 25% tariff, so now it's at about 50% on the country. And again, even though I'm a bull, I have to share the bearish takes with you. I think that is my duty and obligation. It says here that tariff risks are underpriced, warns eToro analyst. Markets are underestimating the risk that US tariffs could be overturned by federal courts, says eToro's Lael Connor. If that happens, Trump may have to refund tariff revenues and go through a longer process to reimpose them, adding uncertainty. These risks could hurt U.S. assets, especially as tariffs are intended to raise revenues to offset Trump's tax and spending plans. Ackner adds, a federal appeals court recently questioned Trump's use of emergency powers to justify the tariffs. Again, this is all kind of opinion based, so we'll see what happens. Swiss government says president and trade delegation met with Swiss business leaders on Wednesday in Washington ahead of a meeting with the Secretary of State. The Swiss government says no meetings are scheduled with Trump currently, but the situation could change. Now, here's the big news today. Fed Kashkari says reversing course on rates may be better than waiting. Fed Kashkari says 2 rate cuts this year still seems appropriate. Kashkari says the Fed needs to respond to the slowing economy. And he says it still may be appropriate in the near term to begin adjusting the policy rate. He says, again, reversing course on rates may be better than waiting. You can see how this doesn't exactly sound great, okay? There's kind of an older saying on Wall Street that I'm going to butcher it here, but goes something like, you panic when policymakers panic, okay? Until policymakers panic, you shouldn't panic. Basically saying when the Fed starts to get concerned, you should get concerned. Until that happens, who cares what happens? That's why, like Fed Kashkari, being he was not exactly, in the rate cut camp before, switching to the rate cut camp today, yes, it's going to dramatically raise the odds of a rate cut, basically solidify a rate cut at this point, or multiple rate cuts this year. It does put Wall Street a little on edge or a little nervous, hence why smaller cap companies, riskier companies are selling off today more than established companies. Fed Kashkari says it's still not clear what impact tariffs will have on inflation. Kashkari says if inflation does rise because of tariffs, the Fed could pause or even hike. Kashkari says ultimately you cannot fake economic reality. And he says the economy is slowing. Now, Apple is boosting markets today as well because they are committing to a $100 billion domestic investment. Kremlin's aide Ushkov says Putin and U.S. Special Envoy Witkoff talks were useful and constructive. White House senior advisor Hassett on the Fed board says they seem to be voting in a partisan way. And he does say today that Trump's highest priority is Fed independence. Again, this is a nod to the markets because the markets absolutely need Fed independence. Without that, you kind of destabilize the entire markets because what the hell happens next time you have a recession and the Fed is in the government and the government doesn't want to free people out, so the Fed can't do anything and cause an even worse issue, right? There's a lot of different scenarios where an independent Fed is critically important for stability and longevity of the financial health of this country. This is a direct nod to the markets. And that's what I'm paying attention to right now. Just how committed to Trump or to the markets is Trump, right? And every single time, there's a test, Trump shows how committed he is to the markets. And Hassett says that Trump's top priority is to make economic data reliable. And in a little bit of maybe arbitrage data here, take it with a grain of salt, Las Vegas's tipped workers say their income has fallen by more than half as tourism plunges. So if we look at the Fed rate monitor tool, okay, this tells you pricing for the Fed meetings up until, the end of 2026, okay, which by the way, just to show you guys, the highest probability currently has the federal funds rate between 3 and 3.25% by December 9th, 2026, okay. It's pretty close here for 2.75 to 3%. And decently high as well for 2.5 to 2.75% for the federal funds rate by, the end of 2026. But for September, there is currently a 90.6% chance of a Fed rate cut. Just so you guys are aware, the Fed always does what is priced in by the markets. You never get surprised by the Fed, literally ever. Whatever's priced in, it could be 2 days before a Fed meeting, or a day before, or 6 hours before a Fed meeting, or before the conference. Whatever is priced in, if something changes, doesn't matter, the Fed is always going to do it. Or at least in the past 40, 50 years, they've always done what is priced in. So it's pretty certain at this point you're going to get a Fed rate cut in September. The markets are also pricing in a 60.2% chance of a rate cut in October. And for December 10th, 2025, you are pricing in a 46% chance of a third rate cut, which is currently the highest forecasted probability. Okay, so you're technically pricing in damn near 3 rate cuts by the end of this year. And again, it's important to now go over this, right? Bowman is team rate cut. Waller is team rate cut. Kashkari is now team rate cut. And the vacant seat from Fed Kugler is going to be replaced with somebody that is team Fed rate cut. Okay, so that is 4 Fed governors right there that are now team rate cut. Okay, and depending on how the data comes out, we'll see just how much they are team rate cut. If Kashkari changes views, if we do get higher inflation or the economy looks okay, blah, blah, blah. But you're definitely favoring rate cuts. Rate cuts in and of themselves are bullish. They're not bearish. But the reason why the Fed is cutting is more important than the cuts themselves. If the Fed is cutting because the economy is going into a recession, stocks are going to crash. The last thing we're going to care about is rate cuts. If the Fed is cutting because inflation is not an issue and there's slight cooling in the economy, that's fine. Okay, that's bullish. Rate cuts outweigh the slight cooling, right? Because rate cuts should make the economy a little bit better. I don't think we're going to be in a scenario where we start to think a recession is actually going to happen, right? I just don't see that as happening. I think we're going to get rate cuts. Things are going to cool a little bit, but it's going to be net a big positive, especially for those interest rate, sensitive sectors. High beta, AI, high growth, like that is the area I think is really going to excel from about midpoint October to the end of the year. That is going to be, I think, the most bullish 2.5 month period you have seen in a very long time. As we get ready for 2026, as we realize we don't have an inflation problem, we have very positive things from the BBB, no tax on tips, no tax on overtime, being able to write off car loan interest, couple rate cuts by then as well, with the expectation of multiple rate cuts in 2026. Again, 100% capital depreciation on capital investments, right? From a business perspective, that is very stimulative. Something I don't think the markets are fully appreciating at this point, among many other things that are going on, like the core AI theme is not going anywhere. All in all, long story short, I think the last 2.5 months of this year are going to be very positive. What happens in August, September, and the first half of, October, the next 2.5 months, a little bit of a toss-up. Sideways trading, new all-time high here or there, fall a little bit here or there. Like, don't be surprised if that happens. I'm not expecting a face ripper rally for the next 2.5 months, which should be positive. That gives you time to work, time to invest, time to get ready for what I think is going to be a very strong bull market into the end of this year and into 2026 and 2027 and most likely 2028, although that's too far out to give any kind of accurate forecast. Let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, hit that like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. Come see the stock that I just put over $75,000 into. I think is going to, fingers crossed. I mean, I'm fully positioned in the stock. Go crazy after earnings on August 21st. So we will see pure play AI stock growing at hundreds, thousands of percent. No institutional ownership, 40% insider ownership, 40% retail ownership. Like, there's nothing to not love. Partnerships with Google, Microsoft, Tether, like it's actually ridiculous the stock is trading at where it is. Long story short, check it out, link down below in the description of this video. Have a great rest of your day, and I will see you in the next one.